Morning, everyone. Welcome to this morning's edition of the NPC Markets Morning Call. It's the 4th of March, 2026. I'm Mark Gardner. Now, we've got a new anxiety to add to the ever-increasing pile of anxieties for markets and, markets and investors to worry about is inflation, basically. Essentially around this, the closure of the Strait of Hormuz, which is 21% of the world's oil comes through that. I think it's a 33-kilometre channel, essentially, or gap. And basically for about every 20 odd days, 20 to 30 odd days, it's closed. It's a potential sort of 2 to 3% CPI effect, albeit potentially short term. And look, I had a look into the data about, obviously Trump's taken 55 million barrels from, which sounds like a lot, from Venezuela, and they've got another 30 million barrels, and they produce 1 million barrels a day. Apparently, that's only 4 days of or 3 to 4 days of what goes through that strait. So whilst I even I made the mistake of thinking, they'll make it up somehow. That's not even really touching the sides. So we realistically, and I know this map doesn't look great on the day, and the Nasdaq's down 1%, but around about 11 o'clock Sydney time last night, so about 11 hours ago, this market looked like horrible. So we had Eurostoxx down 4%, DAX down 4%. The Kospi, the Korean exchange, had the circuit breaker go off. It was down nearly 8%. The SPY futures overnight went down nearly 3%. The Nikkei was down 6.5%. Japan the Japanese, for whatever reason, love a good panic. Apparently they got 8 months of reserves in oil. Yet they were absolutely scrambling to, with concerns over not having enough oil. Obviously very different to the Taiwanese, who have got about 10 days worth of energy independence, but very different philosophies there. But the old Nikkei does love a good panic, but very converse to the last, say, 4 months. Look what was green. The software stocks, the SaaS stocks. I could not believe my eyes this morning when I looked them up, and I just assumed that basically it'd be like, oh my God, how much have they gone down this morning? And weirdly, gold was off, and software stocks were up. So which means we're definitely on the right track, and the price action's been actually very good in those software stocks over the last few days. So look, and just for the record as well, SPY, or the ASX 200, only index in the world up on a 5-day basis. So yay us. Technicals not looking too flash here at the moment. Dailies are now strong sells in the Dow, the S&P, the Nasdaq, the Hang Seng, the China A50. Well, and then we've just got a sell in the Russell and the Nikkei on the daily. And on the weekly, we are in neutral in the S&P and the Nasdaq. The 100 and 200-day moving average is being tested or crossing, or they're looking very much like they're rolling over. The Eurostoxx was on fire. Don't have a short-term indicator there for the hourly for the Eurostoxx, but that's been a strong buy for ages. That's a pretty horrible couple of day run there for, I think it was down 2.5% in the Eurostoxx the night before, and then another 3.5%, and that was kind of where the Nasdaq opened down 2.5%, and only finished down 1%. So there was a stage with about half an hour to go. It was only down 0.6, and I thought I never cease to be amazed in this market after 30 years. That just normally would never happen without any catalyst, particularly when Donald Trump just seems to be, I don't know how many legs the guy's got, but there's only so many feet he can put in his mouth. He's just coming out with these just random string of comments constantly, which is just as a citizen of the US or a world citizen, he's just ousted a leader, and then he's turned around this morning and said, the next leader is going to be worse. he keeps flip-flopping between, we're negotiating, we're going to come to an agreement, we're going to put boots on the, he said the words that no investor wants to hear, boots on the ground. He needs to be quiet, or his press secretary needs to start taking over some of these press conferences, because he's just, this meandering thing is highly sensitive for markets, and just having a casual chat about it and and spitballing is not really great for markets in general. Obviously crude, and well, actually, would you believe coal is the best performer over 5 days, up 16%. Crude was up another 13%. And then gold, silver, platinum all got smacked. Lithium, uranium got smacked. I mentioned this in yesterday's morning call. I think that not gold and silver particularly, but that more so the store of value there. But silver, copper, probably not so much platinum, but lithium and uranium, these critical minerals. I still think there is genuine fears from most governments around the world to be locking down supply chains, and I do think that these governments look through events like this that's going on with Iran at the moment, and I would expect a bid tone to come back to those. I'd just be a little bit careful trying to catch a falling knife, which is not the best tactic these days. So we do have these green shoots of a SaaS recovery. Since last Tuesday, that sort of broader software ETF, the IGV in the US, has outperformed the NASDAQ by 9%. But to give you some context, whether it's too late to buy, since November, basically we're still, even with that 9% recovery over the last week or so, we're still 29% underperformance from the NASDAQ overall in that. And so that's a yearly chart there. So still and truth be told, I'm more and more of the opinion these days where you sort of tend to wait to stabilise or do some dollar cost averaging. And I think the price action shown in those software stocks overnight, Palo Alto was up like 4%. CrowdStrike as well reported earnings after the bell. Was generally, was up about 2.5%. Then it was down about 4%. They've had their earnings call in the last sort of half an hour as well, but essentially flat. They hit or slightly beat expectations, and we'll sort of see how we go from there. So if you can scan this code up here, there is a new updated version of and I'm calling it now, it was the threat map, and it's still a threat map, I suppose, overall. But the survivors and the victims of the agentic AI. So they've got our 5-pillar moat framework. You scan that code there, you can see on the website, you can hover over and it gives you a little explainer as to every stock. There's now nearly 70 stocks in there. There is also non-SaaS for ASX. Mainly at the threat end as well. So yeah, go and check that out. It's been updated. It's been updated this morning, and we'll continue to sort of expand on that as time goes on. But what was with that SaaS-pocolypse, what was a very much an investment thesis or a mild speculation on a framework is actually starting to, since we started this a couple of weeks ago, starting to actually prove to be quite solid. So highly recommend going and having a look at that, to scan that code. So private credit concerns were also on the agenda. I heard a comment from Bloomberg this morning. They had a conference in New York where people turned up and there was guest speakers. No one's talking about Iran. No one's talking about the SaaS-pocolypse. Everyone's talking about private credit. So BlackRock had its flagship private credit fund have the largest record amount of outflows in the last ever. Sorry, that's what record means. Obviously with that inflation numbers, the Strait of Hormuz potentially being closed, adding to inflation concerns after the manufacturing data showed inflation, the PPI showed inflation. We've got payrolls on Friday. If we get a weak payrolls number, then all of a sudden we start talking that dreaded stagflation word. And when we've had moves in gold like this, and many of these moves in oil, etc., this is feeling more and more like 1979, 1980 all the time. So yeah, we've got this. You can sign up to this Software Survivors Enhanced Growth and strategy, and we've also got a webinar coming up next Wednesday at 11:30 Sydney time. I'm going to interview Kai Chen, our resident genius expert at all things software and agentic AI, and the man who built our platform, Mosaic. So yeah, very interesting sort of topic where those moats are, and sort of get a bit of a first-hand, given he's actually lived this software build out. What's actually possible and what's kind of BS effectively. I've noticed with particularly my Twitter feed that it's every second post just about, or even worse, for how to make $1 million with Claude, how to automate a 500-person company with Claude, and blah, blah, blah. They're all sort of the same, different versions of the same article, basically. And it's starting to get a little bit painful, considering they've had two major outages in the last 24 hours as well. I don't know whether I'd be trusting my cybersecurity to something that hasn't even got its own platform stability as yet. It will get better over time, but whether it's worth selling off software stocks 40-odd% is a different matter. So yeah, get on Mosaic. I run an article about the war playbook, and basically what the historical moves in gold and oil over geopolitical events, using historical context and backtesting. And inflation in relation to the Strait of Hormuz. So you can, or you can go to npcmarkets.com.au and go to the market insights and check out a couple of free articles there. But yeah, there's very much in the context of what it means to you and your portfolio. But look, I would say ASX software stocks should be a great buy today. Pro Medicus, WiseTech, Technology One. Really got belted and smacked up yesterday. I think that they haven't started to see any of the stabilisation that the US has, and eventually it's going to catch on. So I think if you're dollar cost averaging that, which we are, it's probably a good day to add another clip at this point, and then leave some for later on as well. Have a great day, people, and we will speak again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.